Back to our channel again. Today in this important video we're going to understand what is liquidity sweep. Basically it is a concept of SMC. SMC means smart money concept. If you watch the video series wise, then initially at the day of 3 or 4 I think we have taught about how many participants or in trading, right? So there are participators like us, a retail trader who have 10 lakh, 5 lakh, some thousands, some CR also. They are considered as a retail trader. And there are people who have thousands and hundreds of crores who actually runs the market. They're basically the FII, DII, domestic institutional investor, foreign institutional investors, proprietary funds, and there are people who calls HNIs, which is high net worth individuals, ultra HNIs. So there are people who actually understands the market better more than us, and they have enough capability, they have enough research team, they have enough software than most of us. That is why they are winning most of the time in the market, and they are called as a smart money. Basically they are doing this liquidity sweep concept. So if I will tell you on the theoretical basis of it, so it basically says liquidity sweep is something. If it is a trap of a retail trader who thinks that this is the positions where, let's say, where the price can actually fall from here, but there is a little bit about stop loss. We everyone have a stop loss, so we plot a stop loss and we plot a target. Let's say this is 1:2 target. Then the price will hit your stop loss and then start it to move towards your target. So you are probably thinking that what is this? If I'm putting it something wrong in my risk to reward ratio, or if I'm putting my stop loss in a wrong position, basically yes, that is right. Stop loss, putting your stop loss in a right positions after understanding liquidity sweep is much more important, because it actually can saves you a lots of traps by the big whales. So let's go. Basically liquidity sweep, if I will tell you, it is as simple as understanding the fake breakout and breakdown, right? So if I will show you, let's say this is the position. As you can see, this is the position of a resistance zone, right? This is the positions of a resistance zone, and this is the positions where the liquidity sweep is actually happened. So why, how would I uh, tell that? Basically when the price is going upward, all the people who are buy, and there are people who buy from here. So when the people are actually buy, where is the liquidity? Where is their stop loss? Their stop loss would be in a down position and the target will be in up positions. As you can see, this is the positions where the smart money would like to show the retailers that the price can actually move upward from here. And those people who have think that this is actually a fake breakout, those people who have think that this is a proper breakout and enter into a trade on the uh, buying positions, those are the people who have trapped and their stop loss is hidden by the smart monies, and we are called as a dumb money, right? They are called as a smart money, we are called as a dumb money. Similarly, this is a proper example of liquidity sweep. As you can see that the price is moving in a zone, right? This is a proper kind of a zone which you should have to avoid. Price is going up and then down, And those people who have short from here by thinking that there is a big red candle is happen, so formed, so there could be basically the change could be trend, and basically the price can fall from here, but they are actually trapped by this candle. They when most of them are actually trying to buy from here as their support zone, so their stop loss is heated right after now, and then move on. Actually, simply, there is a liquidity sweep zone, there is a liquidity sweep zone, there is a liquidity sweep zone. If you understand, and if you're trying to understand the market, then you will find your liquidity sweep zone very easily, right? So this is the positions of liquidity sweep. This is a liquidity sweep. This is another liquidity sweep positions, as we have talked in the previous video. This is again a liquidity sweep when the price is falling. People are thinking that the price can take price can fall from here again. People short here, their liquidity sweep is happened, and then price shooting like that. Like that is how liquidity sweep is actually happen. Why this smart money does liquidity sweep? There is an interesting concept behind it. Let's say they have a lots of money, they have thousands of crore. Let's say they have trade on a 100 crore rupee, and their shares will be their order will be massively executed. So let's say they have a 100 crore and their shares would be 1 lakh shares, and they want to buy it. Then if they were placed 1 lakh share for buy, then equivalent we need 1 lakh sellers to sell it. That is when the order is actually executed. If you understand the market from the core basis, if there is a someone who wants to buy, let's say something, there need to be someone who wants to sell the same thing, right, at a bid and ask price. That the price should be at somehow same, right? So that is when so there is literally very tough into the market where finding 1 lakh shares a seller in the market instantly. So what they did trying to buy it slowly, gradually. Let's say they buy it first 5,000 share, 10,000 share, then again 15,000 share, 25,000 share. That is how they buy it, right? And similarly, that is for attracting the newcomers trader, for attracting the trader who doesn't even knew much about the market, and to trap them and grab their money, hit their stop loss, and then again going the way. So that is what smart money is actually mean, and I'm trying my best to tell you, to teach you what is a smart money. If you still have any question, you can ask me in the comment sections, and I will definitely try to answer your question. I will see you in the next video. Bye.